Hey guys, what's up? PipSnipers here, back for another update. Let's take a look here at BTC, and you can see that going back, we were outlining that we had a lot of liquidity underneath this trend line. You see how we were just slowly building it up every single time? The market maker wouldn't allow people to long the price that much. You guys see that? You see how many times it comes down there? Right? And that's after a capitulation event, right? If it was coming from the bottom and it was doing that, then we could consider it like a 3 drives pattern. However, we came down here below this trend line, right? Came down here, had a retrace, and this price action over here was on the weekend. And I was pointing out to my members that we had bearish divergence on the indicators. So take a look here at the RSI, and if you take a look here at the 4-hour time frame, you can see that as we were going up on the weekend, we were forming this bearish divergence. And I was actually pointing this out in my last video, which was yesterday. And you see how you have a equal high, or even a higher high but a lower high on the price. And then we had this breakdown. This was going into New York session on November 3rd. So this was today. So we saw this breakdown right here, right? And I pointed it out right here. Okay. So this was November 1st. This was November 1st right here. And then we had this push down. Okay, so now what I would be expecting is for price to come up to this region. It's already come up to it, but it can come up to it another time. Take a look here at the 30-minute time frame. Do you guys see this consolidation right here? Then we broke down from that at 10 a.m. And the reason we broke down from that at 10 a.m. Is because that's when the Jane Street algos kick in. It's 10 to 10:30 a.m. and they recently switched the algos now to initiating it primarily at close. So when they're leaving their trading desk at around 5 to 5:10 p.m. Eastern Standard Time. So after we had that breakdown from the divergence, this was on the weekend, and then we had the breakdown, okay? After we had that breakdown, which was today, I pointed out this consolidation event. So you see how we had that capitulation, shorts pile in at around 105,600, causing the price to come back up to the breakdown area from 10 a.m. So that's that red box. And you can see we rejected off of it here. You see? It came back up. Let me remove these drawings here. You see? The price came back up and then tapped this red area. And then we had the breakdown right here. So I think that this downwards move will be sustained to our first point of interest at 103,603. See a little bit of a retrace there from people, closing out their longs, and short stops getting triggered, and then eventually coming down to this internal range liquidity at around 99.6 to 98.697. Our draw on liquidity would be this monthly fair value gap. Do you guys see? Sorry, this weekly fair value gap right here. Okay, that's our DOL. And remember I was saying yesterday that these lows are really weak on the 2 week, because after your capitulation event, you see the low that gets set. This is the low. And every time we have that capitulation event in crypto or on Bitcoin, it comes back to revisit it. You see? Price will always come back to revisit that level. All the way up on the high time frame. So I think it's going to come down. Very, very likely it's going to take out 103.362. Take a look here at the 3 week time frame. And you can see, I told you guys, when you come to your chart, just take a look at Bitcoin in total. All you want to do is mark out the open and the close of the last 3 week candle. And if we can't reclaim this 3 week range right here, or this range, then it's very likely we're going to reach for these lows. Okay. Now, if we do get above that red zone, then it's likely going to come up to the yellow zone right here. And the reason I marked that out is because you came down to it as support over here, right? So there's trapped holders, trapped orders. So it could jump over red, skip to yellow, and then come down from there. And then if we get up here, you'd want to look for more divergence to capitalize on the next move down, right? We already capitalized on this move. I was showing in the Discord over the weekend. Look. And there's also some other charts that I wanted to show you guys, like this broadening top pattern. So take a look here. Okay, do you guys see? So when you're forming that at the highs, it really does look like a power of 3 setup. Like, this is your accumulation. This is your accumulation. This is your manipulation. And this is your distribution. And we can also take a look at the 2 week RSI. Or sorry, the 2 week MACD. And the 3-day RSI. Do you guys see that? 3-day RSI printing triple negative, 2-week MACD turning down. And even if you take a look at the monthly MACD on total, it's about to cross down. Take a look here at the monthly. You see how the histogram is turning down towards the 0 line? And then you got your 3-day MACD, triple negative. Take a fib from the last all-time high to the low, and you can see that we've already hit the 1.618, and then we formed a long-legged doji off of it. But if you take a look at the 3-week, we formed a hanging man candle. So like I said in the last video, all you want to do is just mark out the close and the high of that last 3-week candle. If you can't get above those two yellow lines right here, then you know we're destined to come down here and maybe even take out that low at 2.28. Let's take a look here at Bitcoin dominance. And we can see that Bitcoin dominance has hit our first target. So we gave this target not too long ago in the Discord, and we have successfully hit it on the daily time frame. I do expect a little bit of a retrace here, and then eventually a push up to the median of this wick that was formed on October 10th. So the reason I was targeting this level right here in the Discord is because that was the open a day after the liquidation event, and we tagged it. And like I was saying, this is just a trend line. What did I say yesterday? This over here is a inverted hammer. What happens after inverted hammers in crypto? You get a really big push up the next day, and we got that yesterday right after my video. So I think we're going to come down a bit, just see a little bit of a retrace on Bitcoin dominance, but then come back up to that median. We have to be open-minded to the possibility that the move down in 2025 on Bitcoin dominance was just a higher low in the grand scheme of things. Okay, we have to trade what the charts are, what the market is showing us, what the market is presenting to us, rather than the markets that we want, right? So only trade the market that's being presented to you rather than what you want out of the market. And so far, Bitcoin dominance is continuing to make higher lows here. So like I was saying, when we came down from October 10th, I didn't want to see the price start to coil back up like this, because that showed me that this was just an ascending channel or the start of a larger trend. This move down was a reversion back to the mean. So this move up over here would potentially signal a move above this high over here at 63.5 and right to this median at around 62.18. Right? I wanted to see more of an impulsive move down rather than us just slowly grinding up. So that's Bitcoin dominance. BTC. Let's go back to BTC here. And yeah, this is distribution. Let's take a look at total. And we'll take a look at it. So we can also take a look at USTD dominance. Take a look. On the monthly, it looks very strong. Do you guys see that on the monthly? And then if you take a look here at the daily, you already had a change of character. See, you swept it here. So that showed you that the price wanted to go higher, right? So you're trending down. You have your break of structure, your change of character, your retrace down to the lows, your move back up to the supply that was created in June, right here. And the price showed that it wanted to get above that level. Even though we wicked back down, the price still showed we wanted to go above that level. And you can see that this was just acting as our trendline liquidity. Take a look over here. You see how we're holding this trendline? If you just extend it, you can see that when we came back up here, that was showing you, oh, okay, this move over here was just our trendline liquidity, and now we should be headed up right back up to 137.2. Okay, we also have the 1 month MACD crossing upwards on USTD dominance, and the histogram turning up towards the 0 line. So that's also very interesting. I mean, if it continues to turn up here, then it's most likely BTC is entering into a bear market. Let's also take a look here. Let's take a look here at ETH. So ETH is hanging on a tightrope. And we had a five wave move up already. And it looks like we're just coming down for a wave 2. But the question is, how big will that wave 2 be? Will it just follow Bitcoin? Or will it go on its own track? Or will it go on its own track? Right? And that leaves us to the interpretation of Bitcoin dominance. Bitcoin dominance is currently rising. So it's likely not ETH season yet. It's still Bitcoin season. We had a 5-wave move up here, and if you take a fib from the last swing high before the correction was finished down to the last swing low, we've already come up to the 4.786 extension. So around the 4.236 up to the 4.786 extension, we formed a distribution range. And I was actually warning my members that this over here was distribution. And we saw that breakdown on October 10th. Okay, I made a post here. Let's take a look. So take a look here. I show it. Right here. You see this sell wall? That showed you every time the price tried to get up there, it just would get sold off. So you have to ask yourself, why is the price doing that? Right? I said it's missing a third floor here. That means I thought it was going to go below 38.43 after rejecting off that supply. Remember the 3 floors pattern? But now that we got there and Bitcoin is in the position that it's in, along with Bitcoin dominance, we have to be open-minded to the possibility that this range here is distribution, because so far it's showing its hand as it is, that it is distribution. Or is it reaccumulation? Okay. But in order to consider this reaccumulation, we need to get above 41.54. We need to get back into the range. Okay. Right now we're just consolidating under it. That's not what bulls want to see. They want to see us reclaim this range. Otherwise, this C wave will be bigger and it'll come down to the lower Fibonacci retracements. Okay. So just watch that support. That's the best thing to do. And a lot of people are saying, how can ETH be in a bear market? Well, it doesn't have to be in a bear market. I mean, it could have its own structure, like this is your A, B, and your C, and it could still make a recovery. Or that's all she wrote. And this was just a 3 down in your A, your 3 up in your B, and then a 5-wave move to the downside in your C for the bear market. If it were to play out like that, right? That was the worst case scenario I just showed you. This is the best case scenario where we just come down for a simple wave 2. And Bitcoin will decide Bitcoin and Bitcoin dominance will decide the next trajectory of ETH, whether it's up or down. Okay. So what else should we look at here? Let's take a look here at NQ. Okay, so we had a breakaway gap, a runaway gap, and then this could be an exhaustion gap if we end up coming back down to fill that first gap. And if you take a look at NQ, you can see that on Friday we closed as a bearish engulfing. And then now we have a bunch of inside bars. We've had inside bars for 3 days now. So I mean, it does look bearish. I think we're going to come back to at least fill this gap. It could go higher, could top out higher. However, this does look like exhaustion. You do have the breakaway gap, runaway gap, and exhaustion gap, but it's very important to pair that with RSI. And we do see that when you take a look at here, I want to show you guys this. Okay. Stocks above their 50-day moving average. Notice how as the price rises here, we're printing negative divergence with that. The very bottom pane is the S&P 500. The very bottom pane. The middle pane is S&P 500. Stocks above their 50-day moving average, and the top is the NASDAQ. You see how we printed a higher high here? But we're printing lower highs on the breadth indicator. So only a few, like not all of the stocks are participating, right? And when you have the market at all-time highs like this and the breadth printing divergence, right? What you can even take a look at, and you can even take a look at the Dow Jones and take a look at transports. If transports is printing bearish divergence, then you know there's a disconnect between prices and reality. Take a look. This is Dow Jones. We slammed into this trendline resistance, formed bearish divergence with the RSI. And then when you take a look at transports, you can see here transports. You're forming bearish divergence. There's a disconnect. See? Okay, so the stock market does look like it's going to cool off going into the end of the year. S&P, NASDAQ. It's also very important to note the position of the Russell, especially when your portfolio is altcoin heavy, because, you know, moves in the Russell, they dictate what's going to happen about 1 to 2 weeks in advance for the altcoin sector. And we can see that this could be a wave 1. We had a 5-wave move here, sweeping the last all-time highs. See, we had a double top, and we swept it. Now we're forming bearish divergence. Triple negative. You have a equal high. So you got class C bearish divergence. And then as we fizzle out, like right at the top, you get that triple negative. And this could either be an underside backtest and we come down for a wave 2, or the bullish scenario, the bullish way to look at this would be that we just continue on higher. And it does that. And just pushes up there. So just be a little careful going forward. Sorry, my dog's going crazy here. Okay, yeah, so take a look here at this monthly time frame. I'm just going to show you that. I'm just going to show you guys this one more time before I go, before I end this video. Take a look here. Do you guys see this? That's the monthly candle you want to be taking a look at. I don't think we go back above these highs. I don't. And I'm going to show you what I showed you guys in yesterday's video. I'm just going to repeat myself because this is very important to note. And you know, when you're trading, I think you shouldn't place any trades until you know how to differentiate between a bullish or a bearish candlestick. So take a look here. This was your, let's take a look here at the monthly. This was your doji. This was your shooting star, right? This was another high. So you have 3 highs here. 1, 2, 3, and then you take it out with your 4th one. I'll make this green so you guys can see. You take the 3 monthly highs out with your 4th high, and then that monthly candle that took out those highs, the close came back down to the middle of the range, right? Came back down to the middle of the range, and the open was at last month's close, right? And then this month opened below the close of last month. So last month's close was right here. You guys see? That's last month's close. And you see how we opened below it? We're just at it. But now we're reaching towards the lows of the last month. Right? So just the candlesticks alone tell us what else should we look at today? We'll take a look at, we could take a quick look at XRP. I think I'm going to make another video for my members on that, but I hope you guys enjoyed the video today. I just wanted to make this video as a little bit of a recap on yesterday's one, and just show you where we are, what happened in the market. Bitcoin did end up breaking down from that bearish divergence that I pointed out, right? You see how we broke down from here? We had bearish divergence here. So it's either we come back up to that red region and then turn down, or we come up to the yellow region at around 108, 828, 109, 168, turn down from there to go towards our draw on liquidity at 103, 603 and 98, around 99, 98,000. And then once we sweep those lows and late shorts get liquidated from those levels, we'll eventually reach this weekly fair value gap. This is our draw on liquidity. This is just your sell side liquidity, and then your internal range here. And then your draw on liquidity would be this weekly fair value gap. Hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out. Take it easy. See you guys in the next one.